Alright guys, let's have a look at SPY, S&P 500 SPX technicals from here. Friday market closed 1% down, and what to watch from here. So basically technicals, I do not care if you are bullish or if you are bearish. Personally, before we talk about all this stuff, no, I'm not short SPY S&P 500. I'm not long SPY S&P 500. So over the weekend, pretty much flat. So let's see what's going on. So after this pretty big nice rally actually in January, I think it was record January gained. We are into February, and in February we are up as well. So what I'm watching from here, basically, there are a few things I want to show you. So as a resistance from here, before we move on to another chart, we had a little bit of a gap here, gap down back in August when we had a rally in August. That's the basically zone I'm watching to the upside as a potential fill, and I have my even alert. Basically 42.20, that's what I'm watching as an upside resistance potential, and then above that I'm watching basically 4,300. But to the downside, if we take a look at the this basic support resistance level, so this breakout level of 4,100, that's the support I'm watching, and below I'll be watching basically moving averages from there. So let me bring up the 50-day, 200-day. You can see, technically speaking, we do have a golden cross, as they say, which is a bullish sign when 50-day moving average crosses above 200-day moving average. But 200-day moving average still in a downtrend. So on my chart, red line is 200-day moving average, but this yellow line is a 50-day simple moving average, and you can see, well, that 50-day moving average is in an uptrend. So basically that's my support level, would be below this 4,100 if we do see some sort of a big sell-off, because this rally, where did it come from? So I want to show you year-to-date gains for just S&P 500. Once again, we did look at it last time, and we pretty much talked that this rally is basically like most of the, maybe 60-70% of the rally came from tech names. So Amazon, Tesla, Netflix, Disney, Google, Meta, and all semiconductors, Apple, Microsoft, and of course financials. Basically the safe havens that we were watching throughout 2022, they did not contribute a lot. So consumer defensive, flat to negative, healthcare, negative, energy names, negative, utilities, negative. So and if you take a look at the, I'm going to show you one more chart here where little bit of a cautious sign right here, right now, going forward, basically next week, well, going into Valentine's Day, let's say. Number of stocks, percent of stocks in S&P 500 above their 5-day moving average, 59%, above their 20-day moving average, 66%. Why do I care about that? I care about that because of the momentum. If I want to pretty much catch some upside momentum, I want to see high number here, because if stocks, the number of percent of stocks less and less above 5-day, above 20-day, the less I'm convinced that the momentum is still strong. So something to be cautious about, because this rally may be losing its steam short term, of course, because these numbers will change daily. So another thing is here, little bit of a negative divergence. So basically percent of stocks above their 5-day, 50-day moving average in SPY, S&P 500, right now is 69%. And where the divergence is, basically we have a lower high in terms of like when, let me take a look at the date. So end of November, when we had this rally pretty much 90% of the stocks, 92% of the stocks at this high were above their 50-day moving average, which means market was having broad rally. So basically most of the sectors were participating in that rally versus right now only 70%. And you can see it by looking at the SPX chart as well. So this is end of November and basically where we are right now. So basically we're 100 points higher from these levels where 90% of the stocks were going higher. But right here, right now, we are only 70% of the stocks above their 50-day moving average. So that's the divergence. So something to be cautious about. And FOMC out of the way. So we still have plenty of time for the market to digest what Fed did and what they're going to do. So far today, as of now, market is anticipating that another 0.25% hike. 99% basically people think that that's going to be the rate in March meeting, 22nd of March. So what else I wanted to show you guys here? So a number of 50-day moving averages. We took a look at the heat map where the strengths was coming from and put to call ratio. So not that many people were buying significant puts, but I just want to highlight like last maybe 4 or 5 days. So slightly more put accumulation, I want to say. Beginning from January 27th all the way to February 2nd, even though market was squeezing higher, and I think that was pretty big squeeze, there are some people buying puts. And when it comes to like individual orders, you can just go through the SPX option volume, but this is just the put to call ratio, and that ratio, whenever it's below 1 or whenever it's at that 1 level, it means that market a little bit bullish. But as soon as it gets back above like 1.5, 1.2, you can see at these levels 1.5, that means there are a lot of people buying puts, and not necessarily they may be bearish. It could be just hedging when market is going up. So that's the update, and I don't want to. Let's take a look at the SPY actually. So I don't want to make this video too long, but in SPY, pretty much same thing. Okay, I'm watching 410 as a support right here, right now. To the upside, I will be watching 421-ish level, and on SPY also, if you are bullish. Basically, this is the the uptrend I'm watching. Let me make it bigger. So this trend line right here, blue trend line at the bottom. So this is your uptrend if you're bullish, and you want to watch this level as a support if you're bullish. Whenever it pulls back, that's where I would consider going long, because risk reward would be much better than trying to go long right here at the top. And also, yeah, basically this is it. So that's the video. Thanks for watching. See you next week. Take care. Peace.